Hey, good morning, everybody, and welcome to What's Hot on the Open here at MarketStream.live. New trading month, March 1st, 2017. President has spoken, and I am here, Joe Cusick from the Cusick Group. Securities offered by Money Block. Let's take a look at all of the action that's happening, and it's hot and it's furious right now. To the upside, the bulls are clearly in control. You have the NASDAQ Composite up 61 at 5886.86. You have the Dow Jones Industrial up above 21,000 for the first time ever. At 21,060.70, up 248. Russell 2000 up at 1409.96. That's up 31. You see the S&P 500, the SPX at 2391.91, up 28.27. The volatility index absolutely just getting destroyed right now, down 7% at 1192, down a buck. You're seeing bonds completely getting whacked. The TLT is trading at 119.20, down $2.50. That's a 2% drop this morning. You're seeing the commodity markets a little bit mixed to flat, but still in the green. You're seeing nat gas and oil basically flat and up. You're seeing the U.S. dollar still showing some strength, and you're seeing sectors like finance, XLF to the upside. So let's take a look at actually what is hot this morning on the open. There has been some notable names that have reported. Taking a look at Best Buy. Best Buy, we talked about this in Tech Talk, so you can go back and reference Tech Talk last night. We talked about the move being priced in. It was a little over $3 and some change. Best Buy is down $42, or down $2.13 at 42 bucks. That's about a 4.85% decrease. Basically disappointed, and we've seen that these big box stores, also Ross Stores, reported disappointing earnings and guidance. Ross Stores is trading down 2.7%, down $1.85 at 66.40. Where we did see a big box retailer actually give good guidance, good Q, great revenues was and earnings per share was Lowe's. Ticker symbol LOW. Stocks trading up $6.75 at 81.14. Could be a little bit of a short squeeze here, but this big box home retailer did very well into earnings. We also see that Dollar Tree has been holding up post earnings, trading at 76.77 in the green by 15 cents, up 0.2%. We are seeing that Salesforce, good guidance, good earnings per share, up. CRM also always in an M&A discussion, trading at 83.31, up $1.96 or 2.41%. And then we have two notable moves. One in tech, Palo Alto Networks, PANW. This stock is down $33 on missing on earnings per share and guidance. That's a 21% drop in Palo Alto. Palo Alto does have some liquidity issues as far as the stock and the underlying. It does move. We've seen that this moves. Let's see if there's something a little bit more systemic in this area. We'll take a look at this one. And then finally, Mylan. Biotech is up. Biotech has been moving to the upside after the president did speak last night, saying pricing is going to be something that they're going to be focused on. But biotech has been beat up, and we know that the president and his administration is going to be looking at pricing for drugs. Mylan, ticker symbol MYL, up $3.05 at 44.90. Post earnings. So some decent moves going into today. So where's this market going? Well, if you basically take a look at the charts, it's pretty obvious. It's going to the upside. There's absolutely no ifs, ands, or buts about it. The trend is your friend until the end. That's what the saying is. And if you look at the Dow Jones, yes, it's 30 stocks, but I'm looking at the March futures. It's just been screaming to the upside. We're now looking at it. It's well over 21,000 record highs. As I said, if you're not in the market, it's very difficult to say that you're going to get in the market. Strategically, going in and buying a Dow stock right now is very difficult to do outright. But you're going to have to look at strategies like maybe a call calendar spread, as we discussed in Strategy Now this week. You could use a poor man's covered call, or what's called a diagonal, when you're buying a deeper in the money option with an expiration that's a little further out, and you're selling a front month option against it to pay for that. It's called a poor man's covered call or a diagonal. These are approaches that if you're bullish and you're looking to establish some sort of bullish positioning into this market, those are the strategic approaches that you need to start looking at. If you start to get bearish, if you start to think short term that there could be a challenge, right? This is a huge move, maybe too much complacency. Yes, the rhetoric last night was very positive. It was upbeat. President Trump was very presidential. There wasn't quite anything wrong or anything controversial about what happened last night. But again, proof is in the pudding. Executive orders are just mandates from the president that Congress has to start moving forward on infrastructure, tax reform, repeal and replace with Obamacare. None of this stuff has been done yet. People are putting hope and promise. We don't see growth at the level if you're looking at GDP, but you look at PMIs, you start looking at employment, and that's telling you, well, growth is on the horizon, but yet we're not seeing it actually play out both in policy and we're not seeing really red hot inflation numbers. We're not seeing really red hot wage inflation. And you know what? Let's be honest. When you look at employment, I'm not truly believing that most people are fully employed, meaning they're making what they were making in the past, and the dollars that they're making are paying for what they're doing right now. So with that being said, that's why you see this, especially by money managers, advisors, and just in trading professionals, this hesitation to really truly believe in what's going on here. But the reality is the reality. And as I said, the trend is the friend. And when you look at the Dow Jones, been skyrocketing since basically the beginning of 2017 after a consolidation. We're going to keep an eye on that 20,400 level. That is going to be the next level of support and challenge. And then you have basically the 50-day moving average coming in at right around 20,052. What is interesting, though, is if you take a look at the small caps. The small caps, we'll take a look at IWM, which is the ETF that tracks the Russell 2000. You're not seeing the exuberance that you see with the Dow Jones, and we'll show the NASDAQ and the S&P 500. You're not seeing this straight shot up. That, folks, to me, is the canary in the coal mine. If we start to see that we are not getting the Russell 2000, these small cap, domestically centric stocks. These are small businesses here in the United States. If we are not seeing this sector, this index start to really challenge upside, get some momentum with some volume, move away from this 20 and 50-day moving average, right, and extend to the upside, then that's going to put this whole entire rally into question, at least for the short term. It is bullish, folks. The trend is up. But for those of you that are frustrated and are looking for an opportunity to build a core portfolio longs, you're going to need a challenge of either further upside with volume, momentum, and you're going to want to see it out of the small caps. You want to see leadership. You want the small caps leading to the upside. And until we see that with conviction, then again, it's going to be very difficult to start picking your places as far as being either long or short in this market. You're going to have to be very disciplined, very focused. Finally, let's just take a look at the NASDAQ one. We'll take a look at the NASDAQ futures. I'm actually going to take a look at the March futures. They have about 16 days left until the March futures actually expire. And as a matter of fact, the March futures are pricing in over the next 16 days the potential to be either up or down about 116 points. So with the current index basically trading at 5,376, you're basically seeing that with the futures trading at these levels, it could be down and test the 20-day, or you're going to start to see all-time highs in the next 16 days. That's what the NASDAQ March futures options are pricing in for the potential either up 116 or down 116 over that time period. We'd like to see a challenge down here, but again, you're seeing this consolidation up here, but it's been a substantial run to the upside. But that consolidation isn't as prominent as what we saw with the small caps. And then finally, taking a look at the S&P 500 futures, we'll just take a look at the ES contract in March. Again, not that I am a huge technician, but the bottom line is that you're seeing consolidation, huge bump in the S&Ps. Okay, it's not like the Dow Jones, which was basically straight up, the NASDAQ, a little bit of a consolidation straight up. Now you have the S&Ps straddled that 20-day moving average on the futures in March, boom, pop to the upside. As a matter of fact, if you take a look at the S&Ps over the next 16 days, the March futures options are pricing in the potential of a $47 move either up or down. That means that we could see that these March futures could start to challenge basically, 2,400 and some change, or it could get back down into the 2360, 2350 level. A challenge of 2320, 2330 is going to then put the short-term bulls maybe in a little hesitation. But again, this is the area if you're looking to potentially start adding to or building a new long position in 2017 after this enormous run-up. This is an area that you're going to want to see challenged, and this could be a prime area for start looking to build a core portfolio of longs in the S&P 500. All right, folks, that's it right now for what's hot on the open. Join me at 1:30 Eastern time, and I will be coming back and talking more about some specific strategies that you can deploy with a market that's been pretty extended to the upside. All right, folks, we'll see you at 1:30 Eastern time here at MarketStream.live. Have a great day.